Hello, everyone, and welcome. Thank you for taking the time to join us today. My name is Jamie Stanton, and I'm a senior director here at Q4. In today's dynamic market, staying ahead is more critical than ever, especially when it comes to shareholder activism. We're seeing record-breaking levels of activity with a staggering 147 campaigns launched in just the first half of 2024. That's a significant 29% surge compared to the historical average, according to Barclays. These aren't just numbers. They represent real risks. The potential for hostile board takeovers, disruptive leadership changes, and significant market instability. We're here today to talk to you all about shareholder activism, what it is, what it means to you, and how to best deal with it. In this webinar, Brian and I will pull back the curtain on how you can gain a critical advantage. We'll be demonstrating the power of engagement analytics, an integral part of the comprehensive Q4 platform. You'll learn how this powerful tool gives vital insights you'll need to monitor investor sentiment, detect those early whispers of activist engagement, and more importantly, take proactive steps to safeguard your company's strategic directive. By the end of this session, you'll have a clearer understanding of how to leverage the data to protect your company and maintain control in an increasingly active landscape. During this webinar, please feel free to use the questions module to ask any questions you would like, and we'll have time at the end for Q&A. I'd now like to pass it over to my colleague, Brian, to introduce himself.
Thanks, Jamie. Hey, everybody. I'm Brian Graham. I've got over 12 years now of investor relations experience as both a consultant and a practitioner. I've been with Q4 for about 2 years now on my journey. Prior to that, I had experiences as both a competitor and a customer at my various gigs. And I'm delighted to add perspective today. To Jamie's point, this is a very important and topical subject for sure. Jamie?
Awesome. Thanks, Brian. Q4 is recognized by the NERI Certification Council to offer IRC professional development units. You can please request your certificate by emailing marketing@Q4Inc. So Brian, let's talk about what is shareholder activism.
Yeah, thanks, Jamie. I think it's important to ground ourselves with a brief overview of what this is, especially for those on the call newer to the subject, newer to the industry, and also for those veterans that maybe haven't experienced activism directly. This is a topic that can sometimes get a little lost in translation and in the day-to-day. So why has someone decided to aggressively campaign against your company publicly? Maybe delivered a letter to your company, your board, and your management team, perhaps filed a 13D, etc. Well, first off, they feel they have the right to do this as owners. So they're exercising their voting rights. On the long side, they do see value in the business, but they feel there needs to be some drastic changes to unlock and realize the company's potential. So who are we dealing with here? These are very intense, highly motivated individuals. It's a huge dollar investment for them, in many cases, $1 billion plus. So, for example, it can be very drastic what they look to pursue. In Paul Singer's case with Elliott and Honeywell, a major strategic organizational structure breakup. They use very diverse tactics, both to accumulate their position, whether it be direct over-the-counter swaps and options. Perhaps they start off on a 13G and then ultimately move over to a 13D. And also diversity in the way they want to go about incorporating their proposals. So when it comes down to it, they really want to influence. They want decision making and control and influence over that. So naturally, they oftentimes want to be in the boardroom. They want direct involvement and influence over strategic planning. These campaigns can be very public and very intense, where they detail to investors and the public the specific changes they want made. Sometimes they'll wrap it up in a bow and really try to get a lot out of the public with fancy stories that they can tell their shareholders, like restore the magic at Disney and Nelson Peltz's and Trian and Disney's case. They can be very critical of your management teams. They can seek outright management replacement if they feel that strategic decisions and accountability are some of the primary reasons for the company's problems. They also, um, there have been countless examples where they've emplaced entire boards in just a single proxy fight. Um, so it can get very extreme, the actions they take. It's and for companies, for your management teams and your legal teams, it's very costly. The average cost of a proxy fight more than doubled to 2.7 million, 23 over 22, according to Kirkland and Ellis. Some of the higher profile ones of late have been $60 million plus. So it's only going up. So it can be very, very harmful to your reputation with the public, your customers, your partners, your culture, your employees. Um, Having said that, we can see just from them taking a position some upside in the stock price reaction if some other shareholders in the base agree with their proposals or that there does need to be changes. So very, very influential in the market moving news. And then from there, as these campaigns play out, you usually tend to see a lot more stock price volatility. And it can be a pretty significant why. So it can be a pretty significant distraction for management teams and boards. So there's a lot more strategic execution risk. Something else I think is very important to mention, and I've got Ackman here with the pyramid scheme on Herbalife. This data is very compelling and very important and an important tool not only on the long side, but to help mitigate any threats from potential short attacks, or I call them short activists as well. And that's the kind of antithesis where they think the company is worthless or fraudulent, and it can have negative stock price impacts where they benefit as well. So again, these insights and solutions we're going to share today can help you better understand and prepare for all types of threats in the market.
Thanks, Brian. I appreciate that. I really like that you highlighted just all the different types of threats that they can be. I mean, maybe it's that they want you to spin off a portion of your company. Maybe
Mhm.
it's that there's an ESG risk and they want maybe more diversity on the board. Maybe they want you to stop using animal testing products. And so it really can be anything. And something I wanted to also mention is that when these activists are doing their work, when they're working in the background, it's to their advantage that the company doesn't know that they're doing this. They want to
Mhm.
try to hide. They want to try to use derivatives. They want to try to use swaps. They want to get this position very quickly so that they can kind of catch the company on their back toes and then attack and make a change within the company. So that brings us to our next slide about why is early activism detection so important?
Yeah, thanks, Jamie. I'd say these investments and campaigns are just so highly resource intensive. So they take up a lot of their time and money. They take up a lot of your time and a ton of management and the board's time, company resources, whether it be legal, consulting, and other preparations costs. Given how aggressive and public these campaigns can be, to your point, early detection is critical. You can't stop an activist from doing what they're going to do. It's mainly, to your point, about not getting surprised out of nowhere, being aware ASAP and acting on data-driven intelligence. We tell clients that self-reflection is important when you're thinking about could you be susceptible to this. So what makes companies susceptible to an activist coming into your stock and trying to engage in these drastic proposals and changes? I would say have several investors complained about recurring topics in business decisions. I would, as an IR professional, you can look through your CRM and your notes in a very analytical way to flag any negative trends. Just on the slide today, we're highlighting a couple of the most common criticisms that we tend to see from activist targets. It's a little more industry agnostic. Of course, some industries tend to see a little more activism than others. It's a little industry dependent, but this is kind of a more industry agnostic way to think about it. So basically, you can ask yourself, am I underperforming the market, my industry, or my peers? If so, by how much and how long has that been persisting? If that has been the case for multiple years, you're going to be incrementally more susceptible than others in your industry. When your internal community is doing their comp, or you're looking at your say on pay proposals during proxy season, how have the voting records been? How do these compare to the outperforming companies in your industry? Are your executives making X% more in salary than those outperforming companies? Do they have minimal equity exposure in the company compared to some other executive teams? Um, Additionally, what has our return profile been like? How we've been allocating investor capital, and how does that look like? What does that look like compared to others? And how does it look like compared to our initial expectations? Have investors been persistently wanting us to buy back a lot more stock? Do they pound the table about us doing a strategic transaction? Um, Lastly, I'll quickly mention on environmental and social. To your point, it's just having a clear understanding of how we impact the people we employ, the environment, and the communities we operate in is also extremely important to your point on the growth of ESG, at least internationally. Um, so I think it's about having an objective mindset on where you rank across these and other areas. And I think that's very helpful for understanding if you could be at risk of this.
Yeah, thanks, Brian. I agree. I find the self-reflection to be so important, and you need to be objective about it. Like, if your C-suite's money and they're getting comp going up year over year, but the performance is going down year over year, the activists will point that out. Like, I've seen that in so many activist pitch decks, and just being honest with yourself of where we need help, like where are we underperforming, like what can we work on? And when you understand that, you're better prepared to deal with a situation like this.
Couldn't agree more.
So how
So
can you detect an activist as early as possible? Go ahead,
yeah,
Brian.
that's critical, right? And so if it's that critical, how can you do this? How can you find out what's going on, around these various threats ASAP? So that's where we come in, and that's what we're excited to showcase here today. We make proactively monitoring these threats and investors as simple as possible for you, so that you can manage this responsibility alongside your other core workflows. With one click on your platform dashboard, you can deep dive into all your site engagement and analytics activities. And of course, we're going to put some extra emphasis proactively on any known activist engagements for you. No one else in the industry can catch an activist or one of these types of threats faster, and this is an important competitive advantage for our clients. Even if it never amounts to a threat, it's better to be proactive and aware, better to be safe than sorry, so to speak. As we mentioned earlier, it's really about avoiding getting blindsided. So very excited to show you some of these capabilities in our demo in just a bit.
Awesome. Thanks, Brian. I'll get a little bit into the demo, but just a reminder for everyone on the webinar, feel free to use that Q&A button if you have any questions about anything that you see today, any questions that Brian and I can help you with. We're more than happy to, and we'll leave some time at the end for it. Just before I actually get into the actual demo, we really wanted to show this because we understand how important it is to know if an activist is sniffing around your company. The first thing that they're going to do is they're going to do their research. They're going to go on your website. They're going to download your 10Ks. They're going to download your annual reports. They're going to go on your earnings call. They're going to start to sniff around the company. And so within the Q4 platform, we actually have alerts set up. So if some activist decides that they want to start going on your earnings call or go to your website, boom, you'll get it right to your email. Hey, heads up, this is what's going on, so that you know immediately that that activity is taking place. And then let me just talk a little bit about the platform here. So this is the Q4 platform. This is really your overall hub of everything within Q4. You can work on your website requests. You have engagement analytics. If you're doing events, you can manage them through the platform and also work within your earnings lifecycle. For today, we'll talk about engagement analytics. So engagement analytics is a platform that basically takes all of the data of everything within your Q4 ecosystem and allows you to analyze it. You can look at which companies are engaging with you the most, which companies maybe are falling off. This can be very helpful. If JP Morgan Investment Management's a big holder of yours and all of a sudden they're not engaging with you, like maybe as an IR professional, it's time to reach out. You can look through all the different types of institutions, activists specifically, all your shareholders, and also monitor specific institutions. This can be very helpful if you go on a roadshow and maybe you meet with 3, 6, 9 different investors and you want to see if they followed up and started interacting with your website or your earnings call or signed up for email alerts, you can specifically monitor them to keep an eye on them. We also have benchmarking tools. So when you're putting out a press release, how does it do versus the peers? How does it do versus similar companies within your market cap, similar companies within your sector? Do you want to see if it's doing well or not? Maybe you can say, hey, I'm in the lower percentile. I need to work on this to get it up, or hey, this is actually doing pretty good. And you can show that over time, which can be very helpful as well, because typically as you get more engagement within your IR content, you're going to start to get more people following. You're going to start to get more people interested in the story. And ultimately, hopefully the stock price goes up. You can also look at your stock performance versus website activity over time. So you can see that if you have maybe more website activity, how it affects your stock price. You can look at specific IR content. So looking at your events, did we have more people on this event than last? Is it trending down? Is it trending up? Are people spending more time on the events? You can look at page views, where on the website people are looking at, how long they're looking at it, and also content downloads. So if you want to see, hey, we have a lot of people downloading our quarterly earnings, maybe it's your yearly release, maybe it's an upcoming conference that you're going to. It really allows you to do a deep dive into all of that engagement that's going on within your Q4 ecosystem, which can be very valuable. So
Yeah, and just to add to that point on being able to look at the specific things they're doing due diligence on, in activist scenarios, you'll see other things besides quarterly earnings, right? They'll be looking at things like proxy documents, 10Ks, the whole 9 yards, and so those are good indicators from the data as well on that type of behavior.
yeah, and that's a great point, Brian. And we'll talk a little bit about it here in terms of the activists, but just knowing not only that they're looking at you, but what are they looking at? Are they diving into your ESG report? Are they looking at your board composition? We've had
Mhm.
stories of clients where they were specifically looking at one board member, and it's like, why are they specifically looking at this person? Like, what is going on? And ultimately, there was some backstory there, but just knowing that background can be very, very helpful. And so, to talk a little bit more about specifically activists, we've divided it into 2 different types of threats, notable and occasional. As a lot of people on this webinar might know, someone like a Jana, someone like a Starboard, they're very notable, high impact activists. The majority of a lot of the notable activist investments are activist specific. Now, occasional, that's more like your millenniums. Like, yes, Millennium will work with a Jana, they'll work with other activist investors, but their primary investment isn't really in activism specifically. So we do a specific threat level so you can know, hey, is this like a really big deal? Or, okay, maybe this is just a hedge fund sniffing around. But it can be very, very helpful to get that early detection. You can see if they've opened email alerts, if they've been on your events, if they've been on your website, and specifically who at these firms too. We talked about Nelson Peltz earlier. Like if it's specifically Nelson Peltz dialing in, that's much more of an issue than maybe if it's a first-year analyst doing a little bit of work or something along that way. But you can see through the Q4 login who specifically is doing that. You can also see specifically what they're looking at. So in this scenario, they're looking at the ESG report. Maybe that's something you want to bring in your ESG team with if you're going to have a meeting with them to just prepare for that kind of activity. And so it can be very, very helpful to not only get that first heads up that something is going on, but also what are they doing? Like, where are they looking? How long are they spending on it? We've had stories of teams where there's been activists that spend 2 hours on there, and it's like, okay, that's definitely a red alert. Whereas if it's maybe 5-10 minutes, they're just taking a peek at a peer. And I wanted to talk specifically about a story that I had with a client of mine. And so as the director of surveillance here at Q4, we monitor engagement analytics all the time. It is absolutely invaluable to the surveillance that we deliver to our clients because we're looking at custodial flows. We're trying to figure out what's going on in the market. There might be a big block trade or the stock's acting a little bit funny. And having this proprietary piece of data is super, super helpful. We're able to say, okay, well, we know that there's this activity going on. We know that there's maybe this activity going on in the options market, and like looking at the website in analytics, we can tell maybe if there's a new fund coming in, maybe if there's a new firm going out. And so we're dealing with a situation with a client. They were a mid-cap company in a sector that was doing okay, and this was last year. So keep in mind that last year the market was doing really hot, and at this point in the year, the market was up 25%. The client was down 25% and the sector was up maybe like 10 to 15. So a strong divergence from the sector, strong divergence from the market. We in our heads were thinking, okay, activism risk. Like we're underperforming, we're not doing well, especially versus the peers. This is an activism risk. And so we hopped into engagement analytics one day. We were taking a peek at the institutions, and sure enough, there was a big name activist that popped up. So in our mind, we were saying, red alert. We called the client right away and said, hey, we wanted to let you know that there is this activist on your website. They had signed up for email alerts. This is a big issue. We need to let you know ASAP. At the same time, we're also reviewing DTC. And in DTC, there's not really much going on, because the number one question we get with that is, okay, understood. Do you think they have a position? And at the time, there wasn't really a lot of DTC buildups. So it was possible they had a small position, but they didn't have a 5% stake. We didn't even think they had a 1% stake. But we did know that they were sniffing around. So we talked to our client, we worked with the head of IR, and they basically said, okay, I'm going to start doing a little bit of preparation on the back end. So they talked to their CEO, they talked to their CFO, and they said, let's get our war room together, which was the CEO, a board member, the general counsel, the head of communications, and just kind of let everyone know that this is what's going on. They started to talk to some of their contacts about maybe if we need to retain additional legal counsel, do we maybe need investment banking advisors? Should we get a strategic communications firm? Not necessarily reaching out at that point, but just knowing who to go to if they do need that. Like, okay, if we do have to pull the fire alarm, this person is our person to talk to. So we also knew who the activist was because the activist had come in through the Q4 login. So we did a lot of research as a surveillance team about what this activist typically does, kind of the playbook that they like to employ, the stories of how these other management teams responded, and also looked in the peer group. In this scenario, in the peer group, there was Elliot in one of the peers. And so we said, okay, well, what are they asking for from your peer? How is your peer responding? How is that situation unfolding? And kind of giving them all the information they needed to be prepared. And then also, like Brian spoke about earlier, they did a vulnerability assessment. They objectively looked at themselves. They objectively looked at their business and said, okay, where are we falling short? Let's be honest with ourselves. Like, this is where we think we might not be doing the best. So they did all that prep work. They had probably about a month to actually prepare for this scenario. And then when we came in one Monday morning as a surveillance team, bright as day, there was a massive transfer in DTC and a massive buildup at a custodian, which typically caters to this specific activist. So Monday morning, we called our client and said, okay, we've been preparing for this. They are now your number one shareholder. And obviously, we can't stop them from doing that. It wasn't necessarily great news, but they had that time to prepare. They had a month ahead of time because of engagement analytics, because they saw the first time that this activist was sniffing around. When that activist reached out to them and wanted to talk about different changes within the company and maybe where the CEO fell short and where they're spending too much money here or whatever, they were prepared for that conversation. The IRO looked great. He looked fantastic in front of his CEO because ultimately it could be the CEO's job at stake. And they were able to prepare for those conversations. And so when those tough conversations occurred, they had the right people in place, they had the right advisory in place, they had the right answers for the activists. And so ultimately, the activists stayed in the stock, didn't make any super major changes, but they were able to come to agreement, and it made the company look good. The activists made a little bit of money. And ultimately, because they had that heads up and were prepared, it was an absolute game changer for them. Now, Brian, I know you have some examples as well, so I'll pass it over to you to share a few.
Yeah, thanks, Jamie. I think the one I'll really deep dive on and share is a story about a consumer-facing mid-cap client that I've been working with a couple years now. Their top shareholder is a lesser-known activist, not one of the kind of top sharks you think about when you discuss the subject, like we've alluded to today. They originally came in and blindsided them. They didn't have a clue it was going on. It was an extremely painful process. They ultimately decided it was best to make concessions, including board seats, a dual CEO chairman split on the governance side. Pretty much gave them everything they wanted other than an outright CEO chairman replacement. So things died down. Following the experience, they kind of learned the hard way. They engaged us and bought Platform Plus with engagement analytics. Their top concern, and I think this is important to highlight today as well, their top concern was wolf packing after that previous experience as well. They were concerned about others joining in to try to once again overthrow the CEO. But this time they were prepared. They lean into us heavily for stock surveillance and the engagement analytics analysis. The company continued to underperform. We caught it right away. The activists buying up even more stock. They ramped up their site activity, including all those various other documents other than the usual quarterly earnings that I mentioned. On the SEC side, 10K, proxy, yada yada. We alerted them in real time, and sure enough, it was weeks before it became public again, but sure enough, the activist amended their 13D, issued a public letter criticizing the company again, sought to more aggressively push out the CEO. They wanted more board representation, even more, direct involvement in the new CEO search. And they wanted the previous CEO kind of completely dissociated with the company and to sell her shares as well. They had already aligned on a plan internally and with us and other consultants. They responded and defended themselves promptly. It can have to that point on volatility and valuation impacts. That prompt and concise responses are extremely important. If you say nothing, your investors are gonna think or wonder what's going on after this type of stuff happens. We addressed the activists, or we helped them address the activists a little more head on, pivoted to a little bit more of an offensive tone, poking holes at their methods and their motives. But ultimately, the activists did get what they wanted. They allowed the grace of the CEO to step down. They did not get additional board seats. Currently, they are satisfied with the new CEO, but it's a pretty stock specific major overhaul in the business, and there's a lack of clarity on financial guidance, so it's still under pressure. So they've really continued to stay engaged with us and lean into us to proactively monitor their activists and potential wolf packing on an ongoing basis as they continue to navigate these kind of stock specific, company specific business challenges. I'd say we we probably get a thank you from our client 2 to 3 times a week at least, just for these extra efforts and these insights. And she continues the IR professional continues to get high praise from her senior legal and SLT teams for engaging Q4. And we're a top of mind brand for them now to help them navigate this issue and this threat.
Thanks, Brian. That's a great story. And it really just highlights how important it is to be ahead of these kind of things and just to have those analytics and understand who's engaging with you. And, we've talked a lot about doom and gloom. It's not always a nefarious activist, but it can also be great targets, your Fidelities, your Dodge and Coxes, your Wellingtons. So just keep that in mind as well, folks.
Yeah, the use cases are plentiful, but this is the one that helps executives and IR teams sleep a little better at night. This the activist use case for sure.
Yeah, absolutely. All right, let me switch back here to the deck. Let's talk a little bit about best practices, Brian.
Yeah, so I would just say, in conclusion, it's very rewarding to be on the front line and advising companies going through shareholder activism. Companies are leaning into us to power and navigate best in class approaches to how they navigate the problem. I think we'd leave you with the following on the best practices front. If you aren't where you want to be in any of these areas, again, that self-reflection is important, and just give us a call. We'd love to share our solutions with you and how we create value for a lot of people in your shoes. To catch these threats as early, so in conclusion, to catch these threats as early as possible, you must have a proactive mindset to monitoring your website, your events, and your trading. Catching these threats months in advance and avoiding the out of left field scenario is critical. It can save the company hundreds of thousands or even millions of dollars. And I would say just another anecdotal story, even on the short side, I can tell you personally that I went through a short attack while I was at NewScale when I was a practitioner, and this data would have been invaluable to us had I had the opportunity to leverage it. We did not have the tool, and we kind of found out the hard way with the public on the short attack, and we were experiencing 10% plus moves lower day after day after day. It took us completely by surprise. when I joined Q4, I asked to just for my own interest, I asked to take a peek at our engagement analytics data on the back end. Um, and sure enough, the short selling firm was engaging our site several months before they released their research. So it's a very, very, informative information that you can act on with confidence in a data-driven way. And it can have tremendous impacts in the equity valuation and the market cap of your company. The head of IR and I stay in touch with him, and we still joke to this day that we could have saved ourselves a ton of pain if we would have just allocated a little portion of our budget to getting this type of information. Um, Clients using these tools on our surveillance team, these tools and our surveillance team are extremely thankful, and they continue to receive a lot of high praise from their executive teams and their board of directors. So it's crucial to have a proactive and objective mindset throughout this process as you're thinking about whether you're susceptible or you're trying to proactively prepare for somebody poking around, or if you're reacting to somebody who caught you by surprise and playing a little bit of a catch up. So
Yeah, thank you, Brian. I couldn't agree more. Like being able to analyze all the data that you're putting out in terms of your IR content, your earnings calls, your website. Nowadays, it's just the best practice in IR. You have to be able to analyze that. You have to be able to understand who's engaging with you. And there's just so many different aspects of the data that can be helpful, from targeting to activism to showing your management team that your meetings are effective because you went out on the road and met with these people, and now they're engaging with your content, and eventually they'll turn into shareholders, hopefully. But it really is just considered table stakes now. And it can, like you said, with some of these activism scenarios, I mean, it can really be the difference of millions of dollars if you can get ahead of it, if you can understand what's happening, and just be prepared for anything negative that may come, because there are sharks in the water. This is what they do every day. They go out and they look for any kind of story that maybe there's a little bit of hair on it and they want to go after it. And so just being able to be prepared for that and be proactive, engagement analytics is the best tool for that. Just a reminder to everyone as well, if you do have any questions, feel free to use the little Q&A button at the bottom of your screen. We do have a few in the queue here now, so I'll start off with the first one for Brian. So Brian, we talked a lot about being able to understand the early impact of these activists that may be on your website, on your earnings call, and kind of raising the flag, and just how important that is about, hey, I need to let you know that this is what's going on. I talked about the story of one of my clients that was able to do that. But how do I know when not to do that, right? Because like not every activist is going to be nefarious. Not every activist is just going to pop out and have a huge campaign. So how do I know when it's really important to alert them and when it's like, oh, this is maybe just something that's normal and going on?
yeah, thanks. For me, my clients' credibility with their executive team and their boards is critical as well. So we definitely don't want to engage in pump faking, or we want to make sure we have a well thought out due diligence process to make sure that we're flagging this appropriately and not, raising concern unnecessarily. But having said that, anytime I see anybody that has a tendency in any sort of way, it's better safe than sorry mindset. It's extreme due diligence on why they could be poking it around, and if we can't come up with a justification away from a potential threat, we are going to recommend that you share it with your management team. To your point, we have some great tools and kind of data-driven processes in place to help flag activist tendencies and how important of or how kind of core of a strategy it is, to your point on notable versus occasional. So that can be a helpful tool just from kind of a high-level screening process, but I still don't let any stone go unturned, and it's important to have a better safe than sorry approach and at least do some due diligence on it and not let it kind of pass over or get lost in the weeds.
Yeah, thanks, Brian. I agree. You're definitely better safe than sorry in this. And you don't have to always, bang the drum and say, oh my God, 911, we have to do all this stuff right now. But you want to let them know what's going on and say, hey, just a heads up. We had this person was on the website, they were on the earnings call, whatever it may be, talk to our surveillance team. We don't think they have a position. But I think the other piece of that that's important to remember is just where you are kind of in your IR journey around activism. Like, if you've never done a vulnerability assessment, if you don't have like the contacts that you may need from some of the different firms, like if you've never dealt with it, if anyone's never dealt with it, it's different than if it's like, yes, every January we look back at ourselves and we do this assessment and we've been through this, so we have the right contacts in place. And just so kind of like thinking about where you're at on that as well, because activists or not, it is always good to do those in terms of best practices. And so just staying ahead of that is helpful, and it doesn't necessarily mean that an activist has to be on your website for you to do it. You should just do it as part of being a proactive, good IRO.
Yeah, and when partnering with us, we're going to give you clear recommendations and actions that we would take. Just last week, I had a situation where I gave a client a recommendation of no, this is not worth sharing to your management team, even though a hedge fund had potentially built up near a 5% position. We ultimately determined that it was trading the queues, some hot money, fast money type of activity from a pretty well-known platform. So I've definitely had plenty of instances helping screen through these and not raising the red flag and advising as such to my clients so they can optimize their executives' focus on where it needs to be most.
Okay. Another question just came in. Do specific activists have common/specific themes? In other words, do they consistently lobby for either a management change or spin-off or certain operating segments?
Yeah, so Jamie, maybe if we can go back to that susceptibility slide for this one. I would say these are some of the more common themes. Usually, to your point, management change, board representation, I'd say, is the number one angle I see across all campaigns. Jamie, let me know if you disagree, but that's just that direct involvement in any and all strategic or management change decisions. So usually they go after the board first to then engage, to this question's point. Once they can get that influence and the control that they want, then they can aggressively pursue such things as management change or spinoffs or certain operating segments. And then they can actually have votes in the boardroom on what to do. So does that help provide some good context? Jamie, anything you want to add?
Yeah, no, the only thing I would add is kind of the differential. Like, so I totally agree in terms of generalness, but they certainly do have common themes. There are activists who, like I said earlier, maybe they want to push for animal rights. There are activists who maybe want to push for diversity in the boardroom. There are activists who kind of focus on spin-offs and unlocking value. There are activists that focus on board changes, and they're the one that wants to come over and kind of run the show, and they want to take over a lot of board seats. And just being in the surveillance business for over a decade now, that's why engagement analytics is so cool, because in surveillance, you see buildups. It's kind of the typical first warning sign for anything that's going on. But it's not always obvious who it is, because activist hedge funds and hedge funds use similar custodial banks. So the hedge fund custodial bank that Citadel uses is the same custodial bank that Jana Partners uses. So you might not necessarily know that it's this specific activist that is taking a large position, but with engagement analytics, you do. So then you can be prepared for, okay, this specific activist is coming, or they may be coming. We want to prepare this way. And so it gives you that insight to be able to prepare specifically for that common theme, specifically for that common process that they go through. And it kind of gets back to what I was talking about earlier with one of the clients that I dealt with, is like, okay, we know that this activist typically has this common idea. They typically go and they do this, they do that. Maybe it's a letter to the board, maybe it's private meetings, maybe it's whatever it is. But because we knew that ahead of time and we knew that that's how they acted, it allowed us to be better prepared. So in general, yes, activists definitely stick to a kind of playbook. Some of them will move around a little bit, but in general, there's typically a type of activist. So great question. Really appreciate that.
Now, the ones that have been doing it for a very long time, and that where it is a core strategy, they probably have experience across the gambit of the various things we had in the question, right? Pursuing management changes. I know with Procter and Gamble, with Peltz, it was a big operational kind of overhaul, and the way they oversaw and managed the P&Ls. So yeah, once they get the vote from the shares they have on the proxy side and then also board representation, a lot of them have experience pursuing all these various avenues with their new acquired influence and power.
Yeah.
Those are definitely some of the most common ones that they pursue once they come in and start sharing their proposals with the public and with management teams.
Yeah, and the way that they go public can be different as well. Some activists like
Yeah.
to meet behind closed doors, and this will kind of happen for months until they'll come out with an agreement. Other activists like to go public right away, and they'll just like post on their X account, hey, here's our slide deck, here's our thesis of everything that's going on. And they can be very negative and very damaging. They know how to get a public campaign together, and they know how to gain following, and that's like while the stock goes up, and they'll think it's a good idea, and they can get really public, and it can be very nasty. It can be them talking
Mhm.
bad about your CEO, them talking bad about your CFO, and then you have to figure out whether you want to respond or not. But that does kind of bring us to another question I thought was interesting that came in, Brian. So let's say you're in a reactive scenario. You don't have engagement analytics, you don't have surveillance, you kind of had no idea this was going on, and then boom, campaign comes out, maybe it's 405, whatever. And so you're kind of on your back foot. You're in a reactive scenario. What is the best way to catch up if that's the position that you're in terms of an activist campaign?
Yeah, I'd say it goes without saying that it's going to be all hands on deck. Critical to get in the same room together and establish organizational alignment on our playbook to combat this new threat. I'd say first and foremost, to my earlier point, like if you don't respond in any sort of way, your other investors are typically gonna it's gonna affect their psyche a little bit. They're gonna wonder why you haven't defended yourself or rebutted to the situation. So I do think prompt 24 hour, 24 to 48 hour rebuttal tops is critical. And then from there, um, it's about requests for proposals for legal resources and references for various legal teams and optimizing your legal relationship. And it depends on what the activist is saying, but just a little more agnostic. Those are some high level ways to catch up as promptly as possible and prepare yourself um, to navigate the future. If you had no idea, it came out of left field in that kind of worst case scenario. Mm-hmm.
Yeah, I
Anything you would
appreciate
add?
I appreciate that, Brian, and also highlighting that, keeping in mind it's gonna affect your other shareholders. Like maybe you've had a good long-term relationship with some of your top 10 and this happens, like they're gonna reach out to you as the IRO and say like, hey, what's
Yeah.
going on? Why haven't you responded? Why did you respond? Maybe that was a good question that the activist brought up, and it's somewhat almost of like a popularity contest of like, do you believe them or do you believe us? And just all the more reason to be prepared and just have a better understanding of what's going on and trying to get in front of that as best as you can.
Yeah, I remember on the short side at Newsco, like we took a little longer than a lot of us wanted. We had to get our ducks in a row. But uh, our investors were basically some of our stronger relationships were saying, well, just say something. Don't don't say nothing. you know. So, yeah, it can definitely it's going to get their attention. I've seen some investors that have held a company multiple years, feeling happy, kind of on the sidelines, not as quite as engaged. And if an activist comes into one of their stocks, they're immediately on top of that portfolio holding all over the website, calling IR, etc.
Yeah. Awesome. Well, Brian, I think that's all of our questions. Anything else you wanted to say for our guests today?
No, I think we covered a lot of good material. Appreciate all the questions. Hope it was very helpful for everybody. And please keep us top of mind as you're potentially reacting to this, or as if you're self-reflecting and you think you could potentially be susceptible.
Awesome. Yeah, thanks, Brian. And if anyone wants more information on the Q4 platform, we have it up here on the screen. You can book a demo, talk to our sales department. We're more than happy to talk to you more about it. And I guess just once again, thank you for their participation. We believe that by staying informed and proactive, you can effectively navigate the complexities of shareholder activism and ultimately build a stronger, more resilient investor relations function. So we'll be emailing everyone a recording of this session early next week. So keep an eye out for that and have a great rest of your day, everyone. Thank you.
Take care, everybody.